Now let's check out activities at the NGX. What's driving sentiments at intraday? I'm going to be talking to Onose Asote Enaholo, is investment analyst at Main Street Capital. Good afternoon, Onose. It's good to have you on the program.
Afternoon,
Onose,
thanks for having me.
What's driving stocks? What's driving sentiments at intraday? Can you tell us right now?
Well, right now we see banking stocks are driving the highest volumes and values, which is expected. Banking stocks have been driving a lot of the volume recently as investors seem to be offloading shares. We know we've seen FPIs moving out of the equities market. So we see GTB, value of about 1.9 billion so far at the intraday. 55 million shares volume being traded. GTCO, Zenith Bank, and UBA, those are the top three banks. And then you have, MTN driving value and Nigerian breweries. And of all these banks, only Zenith is slightly positive. GTCO is in negative, UBA as well. We also see sales. So I believe that's what we see, and that's expected. Given what's going on in the market, even with banking stocks, we've seen some dividends being paid, but those dividends at the current prices, they are not attractive. I mean, why stay in Fidelity to get 7% yield when I can buy a 90-day Treasury bill for much higher than that? So these are some of the decisions that investors are making, and we're seeing play out in the market.
So it's still going to be negative. As of now, as we speak, it's still negative. That's correct.
Yes, we're still negative.
Okay, so let's just look into a matter that is quite interesting. Seeing a lot of the listings happening at the NGX, and one of it right now, MRS Oil PLC has revealed plans to delist from the NGX. The oil company has already scheduled a shareholders meeting to approve the voluntary delisting of the companies, from the NGX. And this is because this is coming after 54 years, being a publicly quoted company. Why do you think the company is delisting now after 54 years on the NGX? And from what he said, is moving to the unlisted securities exchange, and that's the NEST.
Well, let's paint a picture first. Let's look at what has been going on with all companies in Nigeria. Last year, we saw Shell selling off onshore assets, right? And then we saw Total selling off onshore assets, and even if you look back, a bit longer than Shell and Total, you see Ardova, even though that was because another company came in. So on one end, we see hints that the oil market right now, doing business in the Nigerian market, in the oil sector, may not be as easy as it once was. We have transport costs rising, the general cost of doing business, rising, and it's not out of the blue that a company might want to, well, not delist, because a stringent business environment isn't really so much of a cause. Now, in their memo, they said keeping up with compliance and sustainability and things like that. Now, you don't have to look at some of the reasons why a company will delist. One, it could be that they're trying to reorganize their share structure. It could be market conditions, which we see in the Nigerian market. It could be privatization. It could be because they might want to start a certain line of business that they may not be able to if they are on the NGX. Being on the NGX, you are beholden to a lot of compliance. Basically some compliance and a lot of stringent rules. Okay. And you might want to start off a particular. That might not have give you enough flexibility to actually do certain things you want to do. Okay. Now, we don't really know what that is right now, but those are just some of the reasons why MRS might want to do this.
Okay, we also see the company, the total shares that MRS has now is about 342.88 million ordinary shares, 50 kobo each, and the deal is expected to be executed via share buyback and share capital reduction. How is this going to play out, especially for the latter, with respect to shareholders' equity interest in the company?
Okay, so I think at this point, the share buyback should hopefully take out most of the minority shareholders where, then buy back shares. I believe I heard the buyback price of about 135 naira, which is currently around what MRS is trading right now. Share capital reduction. Now, it could go on in a couple of ways. The major way is they could either cancel shares or they could either write down the nominal value of the shares. It makes sense right now for them to either maybe write down the nominal value of the shares or maybe even cancel a couple shares. If they do cancel a couple shares, that would possibly increase the value of each share, right? Because these share buybacks, they don't necessarily always affect the general market cap. Now, if you have that scenario where they're buying back shares and then they are canceling shares, so each share is now more valuable. Now, if they are moving to the NASD, each share could potentially trade, at a higher price at the NASD, and that could be a way for them to actually raise funds right now. Because if they do want to, raise funds to perhaps even bolster their businesses, this would be a good way to do it. Seeing as raising debt is really expensive right now, and people might not really be keen to going into the equities market given everything that is happening right now.
So you talked about the impact of the share buyback that is not going to be quite significant at the NGX or for the NGX. But MRS is one of the big guys in the oil and gas sector, in that sector of the market. And its exits will lead to, 46.29 billion naira wiped out, of market capitalization removed from the domestic bourse. We've seen Adova leave. We don't have a lot of oil companies listed on the company. Total is left. And O&O is kind of shaky. What's happening there? We're going to be seeing, what impact do you think this is going to have on sentiments, and how are investors reacting to this news currently?
Well, right now, I won't be surprised if investors might want to, maybe for the short term, stay away from the oil market. I mean, even if you look at the last week's performance across all sectors. While some sectors were down, like the banking, insurance, and all, the oil sector closed flat. If you look around other oil companies, you see pretty minimal trading going on, right? Maybe except for Oando, which is currently seems to be in a free fall. But that is to be expected, because when you have an oil company that has delisted, you have two oil companies that are divesting, and then you have one that's coming back to delist. Investors are like, okay, look, what's going on with oil companies, and it just seems like right now things might be a bit shaky. Now, looking at the wider market, yes, 46 billion market cap is a lot, but when you're looking at the entire the entire bourse, the entire bourse can absorb that, as a general, the total market. But then it's just investors. I wouldn't be surprised if investors are going to be really cautious, with all companies right now, which unfortunately might now make it, even a little more difficult for, other, all companies when it talks to like maybe their share capital. So it could potentially be something that starts to spiral. We hope that isn't the case, but we can just watch to see what happens.
Yeah, the oil and gas sector does need a boost there. We have to leave it there, Onoseh. Thank you so much, Onoseh Sortier, now investment analyst with Main Street Capital, for sharing your insights on the program.